Eric Muathe at Muathe.com with about 4 hours to close before the end of the session for May 26, 2017. Let's take a look at markets here. We begin with taking a look at the Nasdaq Monthly. And pretty much not much has changed in terms of the monthly chart. We can see here that the Nasdaq continues to hold above 69.1. The understanding here is that as long as the Nasdaq is above 69.1, expect the market to be sideways at worst and bullish at best. We are seeing a nice continuation of this run-up as long as the Nasdaq is holding above that threshold, something we've known for a while, since we know that when markets move above 69.1, for example here in 2013, we stayed above that level until finally when we moved back below it here almost 2 years later. So the Nasdaq continues to trade exactly as you'd expect a market that is trading above 69.1. If we take a look at the weekly, we can see that on this 3-year Nasdaq weekly chart, this was the previous resistance line on the RSI, and we see that once we broke out above that level here in early 2017, we can see the market came back and tested that line here for the lows there, and now we are trading back above 69.1 on the weekly RSI, which explains why the market is refusing to go down. So as long as the weekly and the monthly are holding above the threshold on the RSI level, expect the market to continue being sideways to bullish. If one is looking for a reason why the Nasdaq could start stalling around current levels, it's on the daily. We see an improvement day to day, but the RSI is making a lower high, especially if a down day is confirmed here. And we can also see that on the hourly. Recently we've seen the market move to new highs, but take a look at the technicals. We see that this is negative divergence, and the most recent high came with the Nasdaq failing to hold above 69.1. So day to day, hour to hour, one would expect a pullback based on this chart. As we come close to the end of the week here, we are seeing the Dow do its best to break out above the previous weekly closing high, and the level to watch here was 21005.71, which goes back to this weekly closing high right there. So the more the Dow can stay above that price, that's a good breakout. Also, we can use the most recent weekly closing high, 21006.71, which was this breakout here, or this closing high there. So as long as the Dow is holding above either of these two numbers, this is a good breakout. Failure for the market to hold above the recent weekly closing high, a failure to hold above that level, might be a sign of a market that is getting tired. Also, we need to watch the weekly RSI. If the Dow can hold above 69.1, then it joins the Nasdaq on this nice run. But if it fails to hold above 69.1 again, that would be a sign of a market that is getting tired. Keep in mind that on the daily for the Dow, we are looking at the Dow doing its best to break out on the daily chart. The level to watch on the daily, which is the current confirmed all data daily closing high, is at 21115.55, which goes back to this close here. As of right now, the Dow has been unable to close above that price. And also keep in mind, this breakout attempt right now is coming at the expense of the technicals, trying to break out there. But take a look at the technicals, not making any improvement, which is not a good sign in terms of momentum. Also, we can see that the recent break level, which corresponds with this break, the break of the highs there, we draw a line from here and we can see where the Dow has been struggling, which is on this line here, which happens to be slightly above or just under, slightly under 61.8 on the daily RSI. And we see that that was the break here, again off the highs. We've been trying to move above this level for the recent daily highs, and now we are back here. So the more this is confirmed as resistance, in other words, the more we get rejected here, the more one can expect that the next swing trade is to the downside. If the Dow is to move substantially higher, it needs to take out that line by moving above this 61.8 level on the daily RSI. If you take a look at the Dow hourly, we can see that if you take the top side of the hourly chart, you can see why the market is stalling around here because of the RSI rejection at current levels here, hour to hour, suggesting that this is where we can expect to start seeing a pullback. Also, this level happens to be the level of the intraday highs for the Dow. As we can see here, the market broke down. So this break comes from the highs there. We take that information and draw a straight line, and you can see that this was uniform activity above the red line, back below it for the highs there, and now we are being rejected there. So you bring back the previous line, which was the top side. We can see that those two lines suggest that hour to hour, one can expect that the next swing trade for the market is down based on this chart, unless the Dow can break out above those two lines. If you take a look at the Dow Transports 3-year weekly, again 3 years of weekly data on the Dow Transports, we get a good bullish signal based on this previous resistance line. As you can see, once we broke out above that level, this breakout here, the market went higher. So what we do is extend that line. Should be something like that. We get interesting points here. From a timing perspective, this was a nice back test of that line for this re-entry before we move higher. We've come back and bounced on this line, which is the lows here, here, and now here. So on a weekly chart, this is a good support line for the Dow Transports, also bouncing on that RSI 50 level. So as long as this line is holding, the Dow Transports are on a recovery mode. But if you take a look at the daily chart, if you use the daily chart to figure out this movement of those highs on a daily basis, we can see that this was the RSI break right here. And we can see, if we take that information and draw a straight line, we can see that we've stalled on this level before, which is this daily high there, and now we are coming back to test this. So day to day, this is where one could expect the Dow Transports to struggle around here. And there's also another line coming off the lows. So this line, you draw a straight line. Previous support line we broke below here for this drop. So what we do is extend that line. And again, we see another inflection point. You got uniform activity rejection here for the highs there. And now we are coming back to back test that line, spring back the previous line. So those two lines will offer some type of resistance. As long as the market is being rejected here, we can expect a pullback of some sorts. Or if the market is to move higher, the first line of the first thing it needs to do is break out above those two lines. So right now it looks like resistance. We can expect that the market is suggesting that for now we should be looking for some type of a reason, or for timing wise, this is where you'd expect the market to start pulling back. If you take a look at the Dow Transports, ever since these highs here in December, which corresponds with this RSI break, we take that information and draw a line around that level on the RSI. Should be something like that. And what this does give us is where the Dow Transports have been turning down. Resistance here for the highs there, double top for the highs there, resistance here for the actual highs, resistance here for these highs, and now we are coming back to back test that line. If this is confirmed as resistance, then logically we can expect that this is where, from a timing perspective, we can expect this market to start pulling back hour to hour. Maybe even the beginning of a major pullback. We shall see. If we take a look at the S&P 500 weekly, we can see that this week it is finally clearing the previous weekly closing high. So that's a good weekly price breakout. The level to watch there, it needs to hold above that level, is 2399.29. As long as it is above that number, that's good. And we can also watch for this in case it drops back and fails to break out. In other words, a failed weekly breakout might be a sign of a market that is due for correction. In fact, if you take a look at the 3-year weekly chart for the S&P 500, take this previous resistance line and extend it out like that. Gives you a very bullish signal here, in that as long as the market is above this line, just like we saw with the Nasdaq, this was a nice re-entry, and this week we are bouncing on this line. So week to week, as long as the S&P 500 is holding above this 3-year weekly line, this market should be stable to bullish. And yet, if we take a look at the daily, just like we saw with the Dow, we can see that this is not a good daily chart because you're making an improvement day to day to new highs. But take a look at the technicals, which are making lower highs. So that negative divergence generally sets the stage for a pullback. Also keep in mind, we are making new highs, all-time highs, but the RSI seems to be struggling to move above that 61.8 threshold number approximately. And we can also see that the previous resistance line, if you take this break, this was a support line we broke here off that high right there. So we take that information and draw a straight line. You can see this is where the RSI has been stalled here off the highs there. We stalled here on multiple occasions off the highs there, and now we are coming back to test this line. So as long as it is struggling to hold these current levels here, more than likely the next swing trade is down, maybe even a major high. We shall see. And on the hourly for the S&P 500, we can see that it is back to test the top side of its weekly RSI. If you draw a line connecting recent RSI highs, you can see it connects nicely with the highs here of early March, highs here, and now we've hit that line and we seem to be struggling. So if the market can't move above this line, then we can expect a pullback. At the same time, if market bulls can move the market beyond the resistance line, any movement and breakout above this line might suggest even substantially higher prices. So if we have to go with what we have in front of us, right now what we have is resistance, suggesting that until the market can clear this line hour to hour, we can expect this to be pullback territory for the S&P 500 and for the general market. Keep in mind, on the hourly chart settings here, I am using RSI setting of 26, just in case it looks a little bit different from your charts. If we take a look at the big picture, S&P 500 continues to hold above 69.1 on its monthly chart. And of course, we know that as long as it is holding above 69.1, it is going to have opportunity of doing something like this. As long as the monthly RSI stays above 69.1, what we can expect is shallow pullbacks, sideways market at worst, bullish market at best. Now that concludes the free portion of this video. The rest of the video is for subscribers, where I discuss stock picks and take a look at commodities and other US market sectors. So for subscribers, let's continue on. For the rest of you guys, enjoy the rest of your weekend. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.